So welcome everybody. It's really nice. There's so much interest for this webinar. 80 people subscribed, and it seems we're kind of reaching that level, that number also. So that's really wonderful. I see many familiar names and faces, also some new ones. So everybody, welcome. This is the first webinar of the MAIA project, Mapping and Integrated Assessment for Ecosystem Accounting. So it's funded by Horizon 2020, and the objective of this project is to support the testing and implementation of ecosystem accounting in Europe, following the UN system of environmental economic accounting / experimental ecosystem accounting. And I think we're very close to dropping that experimental, which would be great. So then from now on, I'll just be talking about ecosystem accounting. What we will do in the seminar is to first, let me see. This is the program. Let me just very briefly introduce myself. I'm Lars Heijn. Many of you know me. I'm a professor at Wageningen University, and I've been quite closely involved in development of the SEEA from the start. And I'm also coordinator of the MAIA project. This is the first of the MAIA seminars. We will hosting a number of webinars for you, because we feel it is important to share and reflect with a larger group of people on the methodologies and the implementation of ecosystem accounting in Europe. But of course, people from outside Europe are equally welcome to this webinar, but most of the participants are from Europe. Well, the methodology is still relatively new. There's been a lot of countries, some 40 already, that have published SEEA ecosystem accounts, but still we're in the phase that we need to test and fine-tune the methodologies and also adjust methodologies to the specifics of countries. So this is the first in a series of webinars that is meant to facilitate that process. We'll have 7 or 8 webinars in the coming months. I'll introduce them later on. But this is the first one, introduction one. So what we have, 2 speakers. I'm very happy that Carl Obst will be the first speaker today. Carl is the editor of the SEEA ecosystem accounting system, and also the editor of the central framework of the SEEA, so there is nobody better informed on SEEA ecosystem accounting than Carl. Carl is from Australia, where he's director of the IDEA group, which I always, Carl, you better perhaps explain the abbreviation. It has something to do with supporting the ecosystem accounting implementation. I'm sorry about that. And Carl is also connected to Melbourne University. And so he will introduce the SEEA process, and also importantly, he will inform us on the revision process, because initially the SEEA was developed with a fairly small group of people, but over time, of course, like it should be, the number of people that has been involved in further developing the SEEA system has grown very, very rapidly, and currently there's a revision process ongoing on the SEEA ecosystem accounting guidelines, with the intention of making the SEEA framework that we have at the moment into a statistical standard. And Carl is together with you in a statistics division, leading, I would say, that process. So Carl will inform us also on that revision process. So I think that's going to be very helpful and interesting for everybody. And I'm really, really pleased that Stephen King from the World Conservation Monitoring Center will be moderating the session. So he will be kind of allocating and selecting questions for discussion. So of course you can send any question with the chat box, right? So please send those. Then there's plenty of room for questions after the presentation of Carl, and also after my second presentation, because after a very short break, I will be presenting some of the methods and models and also valuation approaches actually that you can use for ecosystem accounting. And of course, this is an introduction, because in the following seminars, webinars, we will go in more detail in both the modeling approaches and the valuation part. And again, at the end of the second session, there is space for questions. So what I will briefly like to do before I give the floor to Carl is to very briefly introduce the MAIA project. Many of you in the room know the MAIA project already, but not everybody. And so just very quickly, MAIA project, it's a Horizon 2020 funded coordinated support action project. We're halfway the project now. We've got 4 work packages that are dealing with actual substantive work, plus, of course, importantly, ethics and data management and coordination. These are the work packages: stakeholder involvement and building a community in work package 2, mainstreaming available methods for accounting, work package 3, testing innovative methods, work package 4, and further guiding the implementation of ecosystem accounting in work package 5. And of course, because of COVID, we had to make a number of changes to the program. And one of these changes is that we're doing many more things online, which is so far working out reasonably well, I would say. And this series of webinars is also, I think, one of the responses that we had to respond to COVID, so that we are still able to reach out and build that expertise in ecosystem accounting in Europe. So we have 19 partners in the project. I don't think there's a need to go through them, but from 11, I have to say, unfortunately now, 10 European Union countries and UK also. 19 partners, including research organizations and also statistical offices. It's a fairly nice balance of organizations. These are the work packages. So work package 2, building a community of practitioners. Work package 3, piloting ecosystem accounting, where we're going to build actual ecosystem accounts in different European countries. So dealing with extent, services, condition, biodiversity. Doing mapping, doing valuation. We've got a number of innovations also planned to, at least we hope to contribute with some innovations to ecosystem accounting in this project. But we are looking in somewhat more detail on methodologies you need for mapping hydrological ecosystem services, valuation, big data, biodiversity, and marine ecosystem accounting. So we've got specific work streams there, and they should all lead to some scientific publications as well. Then we are further on in collaboration with UN Statistics Division working on guidelines. So we intend to be, of course, complementary to the guidelines that are being produced by UN Statistics Division. And we're also developing a web tool, which is available online, but it is password protected. So you'd have to subscribe to get access to that. We've got now data in that tool for 3 countries, the Netherlands, Norway, and Spain. And I think that Greece will be the next country that is going to share data on the MAIA web tool. And that web tool is giving you access in a very nice way. You can really zoom in quite locally and on all information that you have in the ecosystem accounts. Now, this is my last slide to briefly introduce the MAIA webinars that we're having. So this is the first one, as I said, on introducing ecosystem accounting. Then we're going to have specific webinars on spatial modeling for ecosystem service accounting, valuation, monetary approaches, extent accounting, condition accounting, biodiversity accounting, and we also plan to have a workshop on marine accounts and urban ecosystem accounts. And we've got the speakers confirmed for all these sessions. But not yet the dates, I have to say. So we'll try to make those available as quickly as possible, the dates of the specific webinars on the MAIA website. That was my last slide, just to really introduce the day. I didn't want to take too much time because we have a lot to talk about. I assume there are no specific questions on the program itself. If so, this is the time to mention. And if not, then I will give the floor to Carl. And of course, after Carl's session, there is still a bit more room for discussion and for questions.
Good morning, everyone. Thank you very much for joining. A great lot of people on the call. I recognise a few of the names. So as Lars introduced, my name's Carl Obst. I've been working on the SEEA now for about 10 years. And so, yeah, it's occupied a fair bit of my time trying to write up things around definitions and concepts and those sorts of things. My idea group, which Lars was explaining, stands for the Institute for the Development of Environmental Economic Accounting. So it's IDEA with an extra E, but still a close connection to the SEEA. And we've been doing a lot of work to try and connect the SEEA and apply it in a lot of different contexts, including at the corporate level, but also working with governments. So but obviously as well doing a fair bit of work on the sort of framework design and working on these types of issues. This presentation, though, I think, as you can probably see from the template, is very much coming from a SEEA coordination point of view through the United Nations Statistics Division. So I thought that was probably the best lens to try and present this and to really, give you a bit of an introduction to it. Some of this material, indeed, a lot of this material you may well have come across before, but hopefully can put it in context for the types of material that Lars will present later on, but also for the rest of the seminars over the coming months. Perhaps it just jumped down 2 slides, I think, Nicholas. So we wanted to give a little bit of a sense of context for, where did the SEEA come from? Essentially, the starting point really comes from the system of national accounts, which was developed to measure economic activity, first done progressively updated. The last version is 2008. There's a talk of revising that for 2025. And so my entry into this whole space around the SEEA comes from this system of national accounts perspective, measuring GDP, national wealth, productivity, those sorts of things. And the general agreement that can be a really useful tool. It's very comprehensive, used by governments around the world, but it's well recognised that there's a gap as well, and in particular from the perspective of the SEEA, that it doesn't capture information around the environment particularly well and how we're using the environment. So if we go to the next slide, please, Nicholas. The idea then was, so the SEEA was a process which started back in the late 80s, early 90s, and over time has developed into, there's sort of 3 core manuals, I guess, at the moment. You can see on the right-hand side, there's a SEEA Central Framework, which looks at things around physical flows of water, energy, waste, resources such as timber, fish, land, and what we call environmental transactions, so environmental protection expenditure, and those types of expenditure flows. So it gives a set of treatments and accounts that you can use to record that activity. Then there's the ecosystem accounting, which complements that. And finally, the light blue, which is applications and extensions. So that sort of starts to become the system. If you go to the next slide, please, Nicholas, you can start to see, though, it's become a much bigger family. So there are also SEEAs for water. There's ones for energy. There's one in the middle there with the leaf on it, which is the SEEA for agriculture, forestry, and fisheries. And there's material developing around tourism, oceans, and biodiversity. So it's this whole area of how we understand this relationship between the environment and the economy is really a very active area. And so it's, I guess the point being, people want to know stuff about this. We want to try and organise information to tell a rich story. And really that's the perspective we're coming from an ecosystem accounting point of view. How can we tell a richer story about this relationship between the environment and the economy? And I think if you can always keep that relationship notion in mind when you get into the detail of doing biophysical modelling or getting caught in valuation methods, coming back to that notion that we're always trying to tell a story about the relationship is really at the heart of the SEEA. Next slide, please, Nicholas. The question there, so one of the questions that often gets asked is, what's this relationship between the SEEA Central Framework and the ecosystem accounting? This is a very stylized and sort of, I guess the simplest way to see it is that on the left there, you can see the Central Framework, and it's looking at individual resources and accounting for those: timber, water, fish, soil, minerals. You have an opening and a closing and how they change, and you can look at valuations for them. Whereas when you go across the ecosystem side, on the right, you're starting to systems that fit together in the landscape. So different types of forests, rivers, coral reefs, wetlands. And they're certainly related. They're not meant to be competing. They're designed to be complementary, but they do take a different perspective. And one of the key features of ecosystem accounting is trying to bring this sort of integrate different pieces of information together in a spatial context. And I'll get onto that a little bit more later. And next slide, please, Nicholas. So why bother to use accounting? One of the main reasons is really because, starting this origin of the system of national accounts and this idea that we had all this economic information that was organised and decision makers were using, but we had this gap. Let's try and take the environmental information and bring it into that economic and accounting type of framework. So that becomes a way in which you can mainstream environmental information. That's essentially the driving rationale behind it. But it turns out that in actual fact, accounting techniques of looking at stocks and flows are actually quite helpful just in their own right for organising environmental information in standardised ways. So that's another powerful use for it. But this whole notion of comparability, coming up with credible results so that's one of the reasons you might want a statistical standard. to bring that sort of authority into the information. The whole idea of accounting is that you don't just do a one-off assessment, that you repeat that on a regular basis. So this getting a time series information that you can tell consistently over time, and this notion of transforming data into information. So there's quite a lot of roles that accounting can play. To try and see how we're building on those through using the SEEA. The next slide, please, Nicholas, where I think we get into starting with some of the core features of ecosystem accounting. So we'll do the next slide as well. Thanks, Nicholas. One of the simple ways you can understand ecosystem accounting it's called the 4-box model. It's sort of in general parlance. This is a demonstration of it in terms of 4 circles. But we've got the extent, the asset condition, and those 2 circles on the left are really the docs element of your accounting equation, and then the ecosystem services and the benefits on the right-hand side. Next slide, please. And what you should, if you can keep coming back to that notion that you've got these 4 boxes and you're trying to tell a story about all of those boxes together in a coordinated way, you'll do very well. Now, in order to give a little bit more rigor to this, and perhaps that's where the accounting comes in, these are the proposed definitions that are going to go out within the next 24 hours with a bit of luck for the global consultation version of the SEEA ecosystem accounting. And I've picked out particular 6 definitions because I think they light the heart of the whole measurement process. So at the heart of it are ecosystem assets. These are the things that we're trying to measure. We've defined them as contiguous spaces of a specific ecosystem type. So that could be a forest, a wetland, a river, characterized by a distinct set of biotic and abiotic components and their interactions. So it starts to allude to the CBD definition of an ecosystem, but placing a statistical lens over that. Then we have an area about which we're developing an account, the ecosystem accounting area. It has a size, that's the ecosystem extent. It has a condition, which talks about its quality. It produces a set of services, which are the contributions that ecosystem make to benefits, where the benefits are the goods and services that are ultimately used and enjoyed by people and society. So that's the notion, that's the flow that we're trying to imagine building through here, is this link between assets, their condition, leading into services and ultimately to benefits that people receive. So for those of you who are interested in engaging in the consultation process, which will run until the end of November, more than willing to we're very open to getting your feedback, not just on the definitions, but on the text that surrounds all of that. Next slide, please, Nicholas. So what I wanted to do here, and this is a very stylized, and having seen the slides that I think Lars will be presenting later in the next session, you'll see a much richer story here. But just to give you the basic idea, you've got a spatial area defined by this ecosystem accounting area, and then within that a whole range of different ecosystem assets, which you would then classify to different ecosystem types. And the logic here is that you can present it in a map, but you could also present it in a table. And this relationship between tabular information and spatial information is one of the key features of ecosystem accounting. Now, you get to that, and the idea essentially being that from a accounting or statistical point of view, you want to make sure that your area of all of the different ecosystem types adds up to the total area. And that becomes sort of a constraining feature on the accounts. So yeah, that's just this notion of a spatial frame. In a sense, you're creating a whole list of different ecosystem assets that you want to tell a story about is I think, the fundamental part of ecosystem accounting. Next slide, please, Nicholas. I remember what I had on the next one. Right. So this was, there's been various diagrams of this. This is the latest one, which has gone into the global consultation version. One of the other, I mentioned earlier about the notion that ecosystem accounting is thinking of things in a more integrated way. That's also seen by the idea that you can see in the hexagons or shapes on the right-hand side, we have the economy, which is within society, which itself is within the environment, the green rectangle. So this notion of nested systems is also one of the features that lies underneath is inherent in ecosystem accounting. And again, here you can start to see where ecosystem extent and condition and the stocks, the ecosystem assets and the blue boxes on the left-hand side, as supplying final ecosystem services into society and the economy, leading to a set of benefits which then ultimately gets to individual and societal well-being. So it's a stylized view of the accounting framework, but it's a way of sort of placing the pieces together. One of the features you'll see here too is that you can see the GDP boundary, which is that thin blue line in the middle of the on the. The idea is that we're not only capturing final ecosystem services that contribute to current production, so in the area of, say, agriculture, forestry and fisheries, but we're also trying to pick up other ecosystem services that effectively expand the production boundary and income boundary of the national accounts and in the SNA. And that's really quite an important thing, but it's also one of the challenging ones from an accounting and particularly from a valuation point of view as you try and do that expansion. So many of the valuation techniques that you'll come up with and try to think about are in this space of how do you expand into a non-market situation, because GDP, by and large, not purely, but by and large, is defined by revealed transactions which people can see and record. Okay, next slide, please, Nicholas. And here are the set of the ecosystem accounts. So the starting point, I mean, you can come at this from a number of different perspectives. You can start from on the right-hand side here and look at the flow accounts, the ecosystem services. The blue hexagons are referring to accounts that are in physical terms. The more orangey, beigey coloured ones are ones in monetary terms. I think for many people involved in this, you would start probably from an ecosystem extent account, which is sort of mapping out your spatial areas and understanding your different ecosystem types, linking that to their condition, and then using that as particularly in their extent of using that to underpin your modelling of the service flows. And then you would lead on to some valuation of ecosystem services, and then using net present value techniques, moving into the monetary ecosystem asset accounts. But again, the whole idea here is that the ecosystem accounts are telling you a very comprehensive picture in stocks and flows in physical and monetary terms. There are a range of other sort of what we call related accounts, including thematic accounts on things like carbon and biodiversity, which can fit alongside these ecosystem accounts. But these are the key ecosystem accounts that are part of this. Coming up, should be. All right, so then I've just got a couple of slides left, and I'm certainly happy to go into any more particular detail on some of that material. But as Lars introduced, we've been going through a process of revising the SEEA. When we wrote the original sort of light green version, it was released to the UN Statistical Commission in early 2013, so a bit over 7 years ago now. It was a small group, as Lars suggested. I had any real idea that it would become quite as big an issue or quite a bigger deal as it has. It's fantastic to see, but it's also meant that we've drawn in a lot more people into the process, from geography, from ecology, from economics, from the statistical world, from the accounting world, and across a whole range of sectors, and it's been used in lots of different ways. And so our challenge over the last few years has been not just to write some guidance and suggestions of how you could build on the work that was written back in 2013, but how could we sort of further take that next step and get to some degree of standardization? A bit of time. So it's just a couple of slides here to sort of give you the general idea of the process. Essentially, when developing, so the aim the idea being that that's something that all countries can adopt, and if they do want to, it's not a requirement that you have to take SEEA, but the idea being that if you've got a document which is a statistical standard, everyone's working from the same base point and same set of definitions. A quick summary is that the revision process was launched in March 2018. We're getting close to a final draft by the end of this year, so we're broadly on track. And we've just commenced, as I've sort of indicated, a round of global consultation where we're looking for comments by the 30th of November. It's turned into be quite a large document. It's getting up close to 300 pages in actual fact. So there's a lot of material in there. It's incredibly rich, and the contributions from a large range of people. As a slide notes, over 100 people have been involved very closely in different parts of that material. So I think it's pretty cool actually to see it all come together. But at the same time, there's a lot of richness and a lot to get across. So don't expect that you have to somehow understand everything about everything in order to be able to do the accounting. Indeed, it's pretty clear to me that I don't understand everything about everything. And that's why I rely on different experts to be able to tell me what to know about the different sections. And that's another key message probably in the MAIA project, is actually being able to work with other stakeholders and use the expertise and depth that you've got across the different bodies of expertise that are there. And the idea in that then becomes that the SEEA provides a way in which you can talk to each other. You agree on a set of terms that you're not all sort of fighting about what is what. Yeah, I think that's the process. It has been quite a long and very engaged over quite a long period of time. If we go to the final slide that I've got then, Nicholas, just to give you a sense of some of the connections to different things that are going on, there is and has been a long-standing what we call a SEEA community. A group called the London Group has been around for, I think they first met in London, which is why they're called the London Group, in 1994. So they've been going for a long period of time and have been supporting the process around ecosystem accounting. Through the course of this year, there have been various expert forums in accounting, which actually worked out quite well. I mean, it's a COVID-related type of thing in the sense that we've had forums before where we've had a one-off event, usually in New York, over the last few years. But this time we've had a series of events and actually got... So it's been very good. National programs of work, but we also know there's a work, perhaps not massive at corporate scale, but there's certainly farms type of work, but also a lot of, I keep on hearing of a range of people who are doing PhDs using ecosystem accounting and that sort of thing. And certainly Lars knows a few of those. There's a lot of links now and very global indicator initiatives about SDGs, the Convention on Biological Diversity, which is being renegotiated at the moment in terms of the Aichi targets that existed last year, and negotiating the post-2020 biodiversity agenda, things around land degradation. There's a whole lot of acronyms going on in there. You'll see MAIA as one. I'll mention briefly the NCAVES project, which is one that's developing ecosystem accounting across China, Brazil, South Africa, Mexico, and India. It's doing very well. Work on oceans. Lars alluded to work on technical guidance. So there was some original technical guidance done about 3 years ago to sort of build on the first version of the SEEA, EEA. But there's now being, in parallel with the development of these conceptual standards, we're looking at biophysical modelling guidance and monetary valuation guidance. Both of there are drafts, advanced drafts of both of those, but we haven't been able to finalise them until we get the concepts done. A range of other engagement processes that you can see there, IUCN, IPBES, Dasgupta. We're trying to engage quite closely with work of the Capitals Coalition and the development of natural capital techniques in the business space. So, yeah, anyway, there's lots going on, and I'll be more than happy to try and answer some questions. And Steve, I'll hand it over to you. Thank you very much, Nicholas, for managing that.
Great, thank you very much, Carl, for that great overview of the framework and as well the pathway for getting it revised and hopefully adopted as an international standard. So just flicking through the participants list. So if anyone has a question, please raise your hand by clicking on your name next to the participants list, and hopefully that should pop up. And we'll be able to see it. I can't see anything at the moment. Alternatively, put it in the chat. Just while people are thinking, perhaps Carl, you presented in your slide on why use an accounting framework for the environment, some useful insights. Perhaps it would be nice to perhaps have some reflections on what you thought were the most interesting applications that you've seen of the framework as a means of, trying to present this integrated picture, if you like, of the relationships between the environment and the economy.
Yeah, cool. I think the thing for me that I've found over the last years is, I was a national accountant measuring the economy for 20 odd years, and it was sort of taken for granted that you would just do those every quarter. You'd produce another set of GDP numbers, and no one ever questioned whether or not it was a good idea. And you always had a set of users who were happy to understand that it was there. And when I started working on the SEEA, I sort of couldn't quite. I was trying to rationalise to myself, even though everyone complained about the GDP as not being good enough, why was it that we didn't have the same sort of thing that brought in the environment? And the more I looked at it, it wasn't because there was a shortage of data. There seemed to be a massive amount of environmental data, but no one was really paying any attention to it. So it seems to me that the challenge then and why you would do accounting was that you wanted some way to actually make the environmental data count. So what was the barrier to doing that? And that, for me, then came to this question of a common language. So the cases where where I've seen sort of the benefits of the SEEA come through is not sort of some immediate sudden insight in the sense that, yeah, that's really obvious, we should have been doing that all along. It really becomes quite a long discussion that matures in different speeds of people realising that there's actually quite a useful benefit of having this rich. Two particular examples. One was there's a guy who's been long in this field, Rocky Harris, who works in the UK at DEFRA, who's been working on the SEEA for a long, long time. It's taken, and the UK has had natural capital protocol processes and committees for quite a long period of time, relative to many countries. I went from here about a year or so ago when they were looking at within their Department of Environment. What they found was it took quite a while, but they started, different policy people, the data people and others within the department were starting to talk a common language. They were starting to understand how they could use each other's data rather than working in silos. And I think that's really one of the big things. The other one's been our recent experience here in Australia. We've been doing work with our federal department, Commonwealth Department of Environment, on some ocean accounting, and it's taken quite probably it's been a 6 to 8 month project. But what we've found is that by the end of it, they're starting to realise that in actual fact all this data linked together. So whereas at the start they were thinking in terms of separate indicators for extent or condition, and they had really fairly patchy data sets, they've actually realised that the accounting enables them to link it together and tell a story. So I think it's all in that whole idea that it's powerful for data coordination, it's powerful for exchanging your methods and experiences, it becomes more credible and mainstream, you can compare results. There's some really cool things that accounting allows you to do, and I think but often it's not the thing that you can explain to someone without them actually seeing it. So it can't. It's not just like selling a new, I don't know what new toothbrush. So people often don't know that they need accounting, so it can take a bit of a while.
Great, thank you very much. A nice analogy. Got greetings from Slovakia. Greetings to Slovakia. Jan Sinerki, apologies if that's poor pronunciation, had a question. Jan, do you want to unmute yourself and ask it?
Yes, hello everybody. Can you hear me?
Yes, we can.
Yep. Okay, I just wanted to ask regarding the last presentation. There was the slide where you presented the the connection with the ecosystem services assessment with the ecosystem services flow, and then the monetary assessment. And particularly, I would like to ask on these steps, what are your preferred methods to assess particularly the ecosystem services flow? That's the first one. And the second one is related to the monetary assessment. What do you think about the transfer value method, and what your preferred methods for the monetary assessment in general when you are doing this for the ecosystem services accounting?
Yeah, well, that could be a very long answer. I suspect it may be something which you might get into more detail as you move through these webinars. So maybe just a couple of quick, more general comments. From a SEEA point of view, in part because we're trying to get at results which can link quite directly to the national accounts, we have a particular interest in using methods which allow us to get to what we're calling an exchange value. And the exchange value is essentially the notion of the price that you would pay if, in actual fact, the good or the ecosystem service was traded on a market. Now, sometimes you can get to that by looking at prices directly. Sometimes you need to look at substitutes for that. And so there's a range of different techniques. But I guess the key point is that you want methods that try and get towards measuring the same concept as you would measure in the national accounts. And that allows you to sort of integrate with national accounting information. There are a range of different methods that allow you to get there. There's also a range of methods which have been long used, but have often been used to measure different things, either marginal prices or marginal values for different ecosystem services, or to measure consumer surplus associated with different services. So that's, but the same methods can be adapted in order to sort of to get to the type of valuations that we want from an accounting point of view. It's not to suggest they're the only values that are relevant. I guess that's another key point. Because often the values in an accounting space can be ones which essentially reflect the existing institutional structure, which can often lead you with numbers which may be lower than you might have expected. But that's essentially gives you a baseline number to say, well, this is how, as a society, as the institutions we have, this is how we're currently valuing the environment. And that then gives you the opportunity to compare that to an alternative and give it a sense of whether or not it makes sense to change the institution such that you would get different values for the environment. The question of value transfer, I think it's inevitable that for accounting purposes that you will need to use value transfer, because you won't have data which enables you to get every service in every location. But then it becomes a question of getting as rich a method as possible for value transfer. So you don't want to be just assuming that every forest is the same, or that every ecosystem service in a different place is the same. You're going to be wanting to take context into account. Now, my understanding is that there's a lot of work that's been done through Europe, and indeed as part of the MAIA project on value transfer. And I wouldn't want to profess to be an expert in that space, but it seems to me that's the type to building that in. But it goes back to then making sure that you've got a good understanding of your extent and condition. So you don't want to do value transfer independently of your extent and condition if in actual fact you've got an integrated set of accounts. So again, it's that sort of use the accounting system to work with you. Don't imagine you have to doing all of these things completely independently. You want to create a single picture rather than a massive conflicting pieces of information.
Thank you, Carl. So we got a question from Cremina on ecosystem service capacity. Cremina, would you like to unmute yourself and?
Hello, and thanks for the very interesting introduction, everyone. I've raised this question before because apart from extent and condition, actually there is one more factor on sustainable provision of ecosystem services, and this is the capacity. It obviously depends both on extent and condition, but also on influences from humans and on the nature of the ecosystem itself. So in a way, it's a wider way to look at it. And I realize it's a more difficult way to look at accounting, but then it's necessary, in my view, in order to remain sustainable and to have some measure on how much is possible to derive from ecosystems. So is there a plan to introduce it into the NCA discourse, also a specific capacity accounts, and if yes, then when and in which part of the NCA document?
Yeah, cool. Excellent question. So the topic of ecosystem capacity has actually been, certainly in SEEA circles, has been around since back in 2012. Trying to sort of really nail it down. There are a lot of different points of view and perspectives on what that meant. And in a sense, it became, the good news is that we now have a body of text which will be included in the document, which will very shortly, next day or so. It does have a section on ecosystem capacity. So it's been added to the chapter that was drafted on ecosystem services. There's a definition of ecosystem capacity that's there. One of the challenges in this space is that the discussion on ecosystem capacity can be quite broad ranging. But we did have I had a sort of a bit of a smaller group of about, I don't know, there might have been about 10 or 15 people over the northern summer who we exchanged a few ideas and thoughts. We've tried to make a little bit of a link to issues around biodiversity. So there's an issue about how you maintain ecosystem function as a notion of underpinning your future provision of services. But then there's also issues about capacity of trying to link it to individual services, which seems to be the practical way forward, at least in an accounting context. So I guess the short answer is there's some text now that we're suggesting that people might be able to develop measures of ecosystem capacity for individual ecosystem services. I wouldn't want to call that an account at this stage. I don't think we're quite at that point, but we do think that there's a possibility that for individual services, that's something that would be able to be measured. Probably can be, the type of information can be set alongside an ecosystem supply account or supply table, which is presented in Chapter 7 of the document. But there's also going to be links to ecosystem ecosystem degradation and ecosystem enhancement. So when we get to the valuation of ecosystem services, and then moving forward onto the measurement of net present values, we've tried to make a stronger connection there between changes in ecosystem asset values and the condition of the ecosystems. And the capacity starts to link those things together. We don't think we're probably at a point yet where we can be really definitive about measurement of capacity in a broad sense, but we do think there are ways in which you can look at it from an individual ecosystem services point of view, but it also will link to these sort of broader measures of condition and biodiversity. So hopefully we've made some positive steps forward there, but it will be one of those things which is going to be on the research agenda moving forward.
Thank you, Carl. So just a couple of questions left, one from Catherine Farrell and one from Kaya Orest. We'll field those and then I think we'll go to the break. So Catherine, do you want to just present your question and call for policymakers to listen?
Yeah, can you hear me? Yeah?
Yeah.
Yeah, so I suppose we're applying the ecosystem accounting at the catchment scale in Ireland, and Carl is actually working with us on a certain level. And I suppose what we found in gathering up the information on ecosystem extent and condition, the condition is, it just keeps turning up as bad. And I suppose I see the framework as an excellent, open, transparent way of demonstrating that if your condition is bad and you're continuing to draw these services, and in a way it's linked to Cremena's question about sustainable use. But where this has been used and where it has been implemented, and I know, Lars, you've done a lot of this in the Netherlands, like have the policy makers listened and, you know, so has it actually been used? This is my question, and applied to stop the deterioration of the ecosystems. Has it made a difference so far? And I suppose it's just, we're at the point where we need to begin communicating with the different stakeholders, and it would be really useful to have examples where governments have changed behaviours or it has been linked, you know, in to change policy. So that's my question.
It's a tricky one, Catherine, because it doesn't. I think anyone who's been involved in the accounting space has found this tricky. And there's partly a question of to what extent the accounts have been put together with sufficient time series in order to be able to tell that richness of story. I suspect there's not that many examples where you've suddenly got a policy decision that's been changed. Out of it, to what extent it's influenced decisions, that's it might be part of the equation, but I think it's still it's probably too early to say that accounting itself has been some sort of silver bullet that has changed policy that may have been in place for quite a long period of time. I guess the other point that I'll is, in most cases, there's not necessarily, particularly around condition, there's not necessarily a lot of additional information that has been brought to bear to put together a set of condition accounts. You're taking data which already exists and reorganising it to tell a story about condition. So I think it's, in some ways, the other question you could say is, well, why hasn't that information that was already there been useful in changing decisions? That might be a useful counterfactual. So why is it we know about biodiversity loss? Why is it that the information about biodiversity loss hasn't been influential in changing the condition, people's responses to the condition of ecosystems? And so it's not a test, I don't think, that should be only placed around accounting information. Now, so in that sense, it does sound a bit defensive, and maybe through the course of this or through this discussion, and others can add in here over the next little while, is that there will be some really nice little case studies and little anecdotes about how it is that ecosystem accounting and the SEEA more generally has changed decision making. But my personal experience is it's probably a little bit too early to tell that there's a widespread, suddenly everyone's got the, it's been obvious, this is what we should have been doing all along. So in that sense, I think the one of the ways to see this is that it's an alternative way of presenting information that might be worth trying because the previous approaches have not been working.
Thank you, Carl. So got a couple of questions from Kaya Ores. I think the second one on valuation we'll pick up in Lars's presentation, but Kaya just put in the question, what is the state of the art regarding possible indicators that could be derived from the SEEA EEA? And maybe, Carl, you could just give a quick summary before we take the break on what's being set out in the revision towards that.
Yeah, so now I'm trying to go off the top of my head about what's, there's a chapter now, it's actually called chapter 14. We've blossomed, so we've got 14 chapters in the SEEA ecosystem accounting. Chapter 14 is on indicators. There are, what it proposes are a set of indicators for each sort of type of account. So for extent accounts, for condition accounts, ecosystem services. In concept, there's a wide range. So particularly, I think one of the more powerful ones are going to be around extent accounts, because I think we completely underestimate how much information there is in terms of organising about the composition of ecosystems, how that's changing over time. So that if you can get the classifications correct, link that to and perhaps overlay information about land use, links to economic ownership, those types of things, I think they will be really very powerful indicators. Measures of condition, I think, will probably take a little bit more time to develop, but I think to the extent that there's a more coordinated approach around condition and bringing the ecological data together, I think that's a powerful thing. The part of the other story about state of the art would be the links that are being made to the Convention on Biological Diversity. So there's quite a strong, they're renegotiating the indicator framework at the moment, and there's a powerful sort of, I guess, standard or framework in which those indicators would be developed. So I would suspect that now the actual selection of indicators themselves is not the role of the SEEA. So again, indicators are really quite a tricky thing in a way, because an accounting framework can allow you to... It's a question of having that link and dialogue with the users and the policymakers about what it is that you want to link to, what do you want to have targets for, and then designing indicators to match. So it's a bit of an iterative process. I'd like to think that the text that's in Chapter 14 gives a starting point for that discussion from a SEEA point of view, but it's certainly one we have to have a little bit more focus on. So I'll make a little bit of a plug around ocean accounting. The group that has been working on ocean accounts over the last little while, Michael Bort and others, has come up with, they're starting to develop a fairly robust set of indicators and statistics around ocean accounting, so which are presented in the in Chapter 14 as well, or maybe Chapter 13. So yeah, there's a couple of points of reference on that question.
Okay, so thank you very much for that, Carl, and thank you for staying up late and participating in the webinar. Well,
hopefully most of you are back from the coffee break and totally refreshed again for the second session, in which I'll be introducing in a little bit more detail the SEEA ecosystem accounting framework, focusing a little bit on models, measurement, valuation approaches, etc. There's a lot of material here, and I can only give an introduction because, as Carl also said, the approach is quite comprehensive with the different accounts, with monetary physical indicators, with maps, with accounting tables. So there's really a lot of information in the SEEA. I will also be talking a little bit about some experience with linking accounts to policies. It's a presentation that contains also quite a bit of slides from the Dutch Statistical Office and also my colleague Marjolein Lof that I would like to acknowledge here as well. So I will not say a lot about the SEEA framework since Carl already introduced that part. I will show mostly the Dutch ecosystem accounts that are in a relatively advanced phase, I would say, talking a little bit about models, valuation approaches, and as I said, briefly about policy applications as well. 2 slides on the SEEA system itself, and this one because I kind of like it. I'm not sure, maybe I put too much information on it, but I think it tries to show, at least in one slide, why we should be doing this ecosystem accounting. Because in blue you see the information which you'll find in the SNA, the System of National Accounts, right? All kind of information on economic production, use of capital, labor, stocks of capital, uses of capital. You get a lot of indicators out of that SNA, such as the GDP. Designed in a time, the black and white picture when there was no shortage of natural capital. Of course, now we're living on a completely different planet where we see that our natural resources are being depleted very rapidly. So we do need to have some measurement system for our natural capital. It already existed for individual resources, so especially suitable for non-renewable, such as oil and gas and mineral reserves, which is the central framework. And since 2010, we've been working on the ecosystem accounting methodology. And in green, you see then the boxes that are part of that ecosystem accounting approach. Here you see the ecosystem services and condition and extent and indicators and asset indicators, and they show you how basically your economic activity depends upon this natural capital. Of course, economic activity does not only depend upon natural capital, but many economic activities at least partly depend on natural capital as well. If you lose your natural capital, you will lose that economic production as well. So we need to understand that, and that's what the SEEA is for. And because the SEEA is such a comprehensive system with high resolution maps, because it should have consistent time series, consistency between countries, there's a whole wealth of information you can get out of it that you can use to support decision making on environment, on natural resources, on ecosystems. Now, this was more or less already shown by Carl. The score accounts, I hope that term is kept in the revision process. So ecosystem extent, condition, ecosystem services, monetary assets. And ecosystem services are not the same as the benefits. Ecosystem services are the contributions of the ecosystems to benefits as measured in the SNA, for example. And your ecosystem services are measured both in physical and in monetary terms. There's also an asset account that one only has monetary units. Then, in addition to the core accounts, there are a number of thematic accounts, and as part of the revision process, those thematic accounts have become oceans, urban ecosystems, greenhouse gases, and biodiversity. So that changed a little bit from the 2017 framework, especially oceans and urban ecosystems were added to that thematic account, and land and water were removed. Now, that's all I wanted to say on the SEEA framework. Now, what I would like to do is to show a little bit the Netherlands SEEA accounts, where we stand. Of course, it's still work in progress. We've been working in the Netherlands for I don't know, 5, 6, 7 years on this. So need to acknowledge also the generous financial support of the Dutch ministries to get this work done. And as I said, work done in collaboration with the Dutch Statistical Office. Now, this is the extent account that was revised very recently. So this map is I don't know, 4 weeks old perhaps. And you show the revised Netherlands extent account, which we now have in a consistent way for 2013, 2015, and 2018. And here you see the units. You see the main groups of nature, agriculture, the whole country, of course, and you see there's quite a lot of units in that map. So we really try to understand how, what elements are in the landscape and reflected by soil type, hydrology, and also with which should allow us to link those ecosystem types to ecosystem services. Now we can zoom in. This is the province of South Holland. In the middle, you see the city of Rotterdam. To me, it's actually this is the map of 2018. It's quite frightening to me how urbanized this part of the country has become. Because you see in orange, you see the urban areas, the residential zones. In pink, you see greenhouses. So south of The Hague on the west coast, there's an area with greenhouses, which is the same area as the city of The Hague. And then the bright pink, is the harbor, the port of Rotterdam, which of course is in the industrial zone as well. And then, for good measure, the island that you see in the south of the map, that was actually the island where I grew up myself. You see, it's the only rural area more or less left in the province. Anyway, what is the kind of information you can get out of that account? So you see here, of course, you see land use change. So here you see the city of Utrecht. There's been some major expansion of the urban area. So that will be the one major trend that is shown. Because with the extended account, we understand very clearly how the land use in the Netherlands has been changing in the last 7 years. And there have been two main trends, and one is an increasing urbanization, as shown, illustrated in this graph on the city of Utrecht. And the other trend was that there has been a conversion of farmland to a nature area. And so those are the two big changes that are really noticeable on the map. And the second example is illustrated here in a small nature reserve, by chance also in the province of South Holland, where you see in 2013 the bottom half of the figure is gray, which is agricultural land, and some of that agricultural land has been transformed into nature conservation area in 2018. Those are the interesting trends that you can show on with your extend account. Now in the Netherlands, we prepare those extend account using existing maps. So we combined, or CBS combined, I should say, 5 different maps, included from the cadastre with farmers registrations, etc., to produce the extend account. But in other countries, of course, you may not have that same type of information available in an easily accessible format. And you can also use remote sensing information to produce your extend accounts. And of course, some countries in MAIA have used the CORIN, which is also the CORIN database, the land cover map of Europe, to produce an extend account. And of course, that's also fine. So that extend account is based on remote sensing images. There's no CORIN map for Indonesia. So here you see an extend account for Indonesia with 30-meter resolution based on different satellites images. And the principle is a little bit the same. You see the main land uses, the main crop types, you see main types of forests, etc. Now, condition account, a few slides on the condition account. Now, what indicators are in the condition account? Now, two types of indicators are fit for the condition account. First of all, indicators that reflect the condition, the health, the state of ecosystems that are also somewhat policy relevant, and that there is not really a need to collect a lot of data, do a lot of analysis on condition indicators that are not informative to policymakers, I think. And the second type of indicators are condition indicators that are relevant in the sense that they reflect the functioning of ecosystems or the capacity of ecosystems to provide services. Now, that link between condition and capacity is not always easy to make, but in any case, that is the general idea of the condition account. And you see a few examples here. You see soil organic matter in the Netherlands in the top 30 centimeters, if I remember correctly, of the soil. This was included in the map because there was some concern from policymakers that there could be some decrease in soil fertility over time in the country. I think the accounts show that that's not so much of an issue. But in any case, because of that concern, that indicator was put in the account. Now, there's also a water quality map, which I'm sure looks familiar to many of you, because that's just the water quality map which is reported by the Netherlands to the European Commission in the context of the Water Framework Directive. So this is existing information. We didn't need to do any new analysis for that, but we said, look, that's a very good and comprehensive indicator for water quality, so let's include that also in the accounts. And the nice thing about the water quality accounts, of course, is that there is already a benchmark there for condition, especially in the revised SEEA. It's important that you have a benchmark, so you can also indicate if your condition is favorable or unfavorable. And in the case of, and that's usually sometimes very difficult to define that benchmark, but for the water framework condition, that benchmark was defined, so we can have the water quality indicators, good or mediocre or poor water quality, as you see in that map. And as you also see, our water quality is actually not that good. This is also a very new map, also courtesy to CBS. Here you see that the density of hedgerows in the country, and you see some areas in the north, they have a very high density of hedgerows. Almost every farmer's field has a hedgerow around it, and this is actually actively run by the Agricultural Nature Farmers Association. So there's a farmers organization that's really doing a lot of effort to farm in collaboration with nature, you could say. And actually this farmers association has been very interested in the accounts also, because they would like to show that their way of farming is having a positive impact on ecosystem services. Now, for sure, you can see that their way of farming has a positive impact on ecosystem condition already. It's really clearly showing up, the dark green in the north of the Netherlands, the efforts of this particular farming association. And of course, the linear landscape elements, these hedgerows, they're important for a number of ecosystem services such as pollination, pest control, etc. And to answer your question, we haven't really looked at in detail how this better condition of the ecosystem is actually reflected in ecosystem services. So that's still work that we still need to do. This map is very recent. And the nice thing about the maps is, of all the maps, right, the extent account, the condition accounts, is that the maps have a very high resolution, so you can really zoom in. This is the east of Utrecht, which you see here, and you see roads and build-up areas. So here you see infiltration capacity of the soil, which we can link to a reduction of flood risks. Now, another important thing of the condition account is that you, as Carl was mentioning, right, the accounts are meant to help you to move from data to information. Now, it's somewhat illustrated by this graph from Palawan. It was the World Bank Waves project, where I was technical advisor for a short while. Well, not a short while, for 3 years actually. So you see here the condition of individual coral reefs, and you see that many of the coral reefs are declining dramatically. So there's two problems here. The one problem is that some of the coral reefs are going down, others are not, and it's difficult for policymakers to understand all these graphs. So then the idea was to say, okay, look, we need one aggregated indicator, which in this case is the average live coral that is remaining on Palawan. So in other words, the idea is that by aggregating information in a good way, you can actually make it easier to understand your data. And the second advantage here is that of accounting, and it's a very important advantage as well, is that the reports with that information on individual coral reefs was really hidden in the desk of some of the staff of the local environmental authority. But by putting it in an account, the idea is to make it transparent and to be more, to make that information available to everybody that is interested in the state of the environment. So instead of having information on the environment dispersed on many different organizations, many different places, you would have one central point of entry for your environmental information, and thereby making it much easier to apply and to use that information in support of policy making. This is a bit of an old graph, I must say, that I've shown in previous presentations, but just to summarize, right, you've got for ecosystem services, again, you move from your extent account to your physical ecosystem services map. With valuation, you go to your monetary ecosystem services map, and of course, you need to translate your map into accounting tables as well. And in accounting tables, you would like to indicate both the supply of ecosystem services by the ecosystem and the use of ecosystems in the economy. And in the SEEA ecosystem accounting framework, by definition, the supply of ecosystems by the ecosystem is equal to the use. So every ecosystem service is used. Now, just a few examples, right? So you see here potatoes and cereals, and it's quite interesting to find out, for example, that potatoes are by far the most profitable crop for the farmers. That is really where they get the money from, contrary to cereals, which they have in the crop rotation, but actually is more, it's breaking even, but not yielding any profits for the farmers. So there's drinking water, extraction zones, and infiltration zones are in the accounts. So you have your provisioning services covered also from that perspective. Now, there was a question from Cremena on capacity. Now, capacity is indeed not part of the, as Carl was also explaining, of the SEEA framework at the moment. And the reason for that is that it has been a little difficult to define capacity in such a way that everybody was very comfortable with it and everybody agreed upon it. And it's also difficult to measure capacity in several, for many ecosystem services. But for some services, it is a bit more straightforward to measure capacity. And here you see an example, because this is information on timber. And timber harvesting in the Netherlands, of course, for us, this is a very small industry because we don't have that much forest, and the forests that are there are mostly used for recreation. But still, there is, of course, some timber harvesting. And in the accounts, you have 3 different indicators. You have the stock of timber, standing stock, and here it's organized by province. You also have the harvest of timber, again by province. And you have the mean annual increment, and that mean annual increment of timber, so the regrowth of the wood in the forest, that is an indicator for capacity, because that is kind of defining the amount of timber that you can harvest in a sustainable way. If you go beyond capacity, then in principle you're on an unsustainable pathway. In the Netherlands, we only harvest about 1/3 of the mean annual increment, and that was shown by the account. So that is then quite interesting as well, because it seems as if we would be able to increase our timber harvesting if we do that carefully, potentially in a sustainable way. By comparing capacity and harvest, of course, you could in principle also visualize areas where you have an unsustainable use of your ecosystem. Now, this graph shows that a little bit, work from Norway, but I have to say that this is very tentative, because it's only based on a limited number of years. And on the bottom right-hand side, you see a map where we compare that mean annual increment, that's for the capacity, with the actual harvest. The red areas, in principle, the harvests are exceeding the capacity, but I definitely do not want to say that the timber harvesting would be unsustainable in this part of Norway that we examined, because it is very close to zero. So it is actually quite a nice balance between capacity and harvest. And also we measured only a very limited number of years. And so in order to do that properly, of course, you need to have information on quite a number of years. Now, regulating services, there's I think about 6 regulating services in the Netherlands accounts, and there's not much point in showing all of them, but just one example here is air filtration. Maybe good to go through the logic chain of that service. And so the contribution of the ecosystem is that forests and trees and other vegetation, they capture air pollutants from the atmosphere, and thereby they reduce the exposure of people to air pollution. Now, every vegetation type has a different capacity, a different rate, I should say, a different rate to capture pollutants. First of all, you need to find an indicator for your pollution. So we use particulate matter, which is a bit of an aggregate indicator for air pollution, which is very widely used. You've got PM10 and PM2.5 as usual measures. With our model, we're able to then show how that capture of air pollution by the vegetation leads to a reduced exposure of people to air pollution. So that's the benefit, that reduced exposure. And the capacity of the ecosystem is the actual capturing of air pollutants. And here you see more or less which areas are good in capturing air pollution. The forest areas stand out. And basically you need two things. You need a lot of forest, you need a lot of vegetation, and you need high concentration of pollutants, because the higher your concentration of air pollution, the higher also your regulating services. So it's a bit funny in a way, because if you have high levels of pollution, then your ecosystem is able to really provide a lot of benefits, a lot of services by reducing that level of pollution. So in a way, if you pollute the environment more, the supply of some of these ecosystem services, some of these regulating ecosystem services may go up. Maybe at first quite counterintuitive, but in other way you could also say it's logical. So two more examples. We have pollination and pest control. I think pollination is in the next slide. No, it's not. So it's a later slide. So pollination is reflecting the hedgerows and the small landscape elements. They are they're a habitat for pollinators, and we looked at bees and bumblebees, and these bumblebees are able to pollinate your crops, but not all crops require insect pollination. Crops that do in the Netherlands are especially apples and pears and rapeseed and vegetables. So the areas that are showing up in this map are these crops, and there are areas that are actually served by habitats for pollinators that are nearby enough so that pollination actually can take place. Here is a map for the recreation. So of course, cultural services are also included in the SEEA framework. We've got provisioning, regulating, and cultural services. Again, we measure everything as the contribution of the ecosystem. So also for cultural services, you'd have to define, okay, what is the contribution of the ecosystem? Now, in the case of nature tourism, we assumed in this work that the contribution of the ecosystem is that it's providing opportunities for people to walk in the forest, to hike in the forest, to use the forest, and actually they're also doing that, right? So it's not that it's just providing an opportunity, but people are actually using the forest for recreation and for hiking, but the providing that opportunity, that is then the ecosystem service. Now, how to translate that then into something more tangible? Well, we translated that for tourism, which involves, in our definition, overnight stays. And so we said, and recreation is more daily visits. We said, okay, for tourism, we want to measure that number of overnight stays that are generated in hotels or camping sites or whatever, in close to nature areas. And we only want to include in that service, when we measure that service, the number of overnight stays that we can actually allocate that actually are caused by the presence of that nature. And so we take our overall tourism statistics, our overall travel statistics, you could say, and we take out all business meetings, we take out all visits that we can relate to maybe urban cities, urban visits, or visits to museums, and then we only take the number of people, the number of overnight stays that can be linked to ecosystems, and we map that, and then we say, okay, and then we allocate that again by having some model that is relating overnight stays to where people go, and then we relate that back to the ecosystem. So in the map and in the tables, what you see is the the number of overnight stays that are generated by specific ecosystems. So, and for Dutch people, this is not a surprise. The overall pattern where we see in the southeast, it's a very attractive area for tourism because it's a bit hilly. It's the only hilly area that we have. And in the center of the country, you've got the forest area, and on the coast, you've got the beaches and the dunes, which are very popular. So these are the areas that generate overnight stays. And but the nice thing is by allocating it to the ecosystem, you make clear what the contribution of the ecosystem is. Now in Palawan in the Philippines, again, the Waves project, we did the same thing, and it was very nice. We're still working on a publication on this. But the idea here is that first you have the attractiveness, the ROS, which is a term from the JRC actually, recreation opportunity spectrum, the attractiveness of the landscape if you want. Then we have the number of overnight stays generated, so overnight stays in hotels, but allocated back to ecosystems per hectare. And then we have the monetary value of that as a resource rent on the right-hand side. And if you translate that to euros, it's more or less, this was pre-COVID, of course, then we have about 500 euros per hectare per year as profits, as resource rent. So those values are quite high. And when we were discussing policy impacts, I think maybe one quick remark here already, because I think it's a question that is very important for all of us. How can we assure that there's actually a policy application of our accounts? All the work we do, of course, it needs to be used for something. In order also, if we want to continue this use, we can only get funding if we demonstrate that it is policy relevant. Now, it seems to me that in policy making, it is biophysical environmental information is a small part of the overall mix of elements that play a role, overall mix of motivations that play a role in policy making. So economics is a slightly bigger role, but of course on top of that you got politics and all kind of other elements. So it's very hard to pinpoint specific sets of information to a policy decision, because policy decisions are always taken, I think very seldomly taken only on the basis of biophysical or even economic information. There's always all kind of other factors that play a role and are probably more important, but still they are informative. And this is one example, because we did show our ecosystem accounts at the time to the governor of Palawan, and his vision was to maximize agriculture with palm oil and pineapple plantations, and to use that to have economic development on the island. And at least these accounts showed him that, well, if you look on a per hectare basis in all these red areas, actually the revenue you get, the profits, and it's real money, right? It's resource rent. It's not like a carbon market. Of course, it's perhaps not something people really get in the pocket. But this money from tourism, it is real. So we were able to demonstrate that the profits from tourism on a per hectare basis were actually higher than those from agriculture, and that was something which completely, was very new to him. And in addition, we said, look, there's another thing here, and that is that there's drinking water, and he had a very ambitious scheme at the time where he wanted to have drinking water in all the villages of the island. And the drinking water schemes, they needed to extract drinking water from the forest uphill. But as you can see from the shape of the island, there's many small watersheds here, and the island is very long. So actually, you'd have a lot of decentralized inlet points for these drinking water places. And then we were able to show with another model, not shown here in this presentation, that if you cut the forest, actually you would really jeopardize your availability of water for these drinking water points. So that means that if you do want to continue with providing drinking water to your population, you really have to also protect the forest and the upper parts of the watersheds. So anyway, that is, of course, I don't know, right, what decisions were taken later on, but for sure, the governor at the time was very receptive, and he really wanted to know all the details of the accounts and have the results also. Now, a little bit about modeling techniques, and of course, this modeling for these accounts is quite specialized work. You do need people that have experience with GIS, so geographical information systems, and spatial models. And the models that I can only be very, very brief and very general. Of course, there's also a specific webinar on this that will provide more detail. But the easiest approach, which we also used in the Netherlands, of course, is using lookup tables to give a specific value for an ecosystem service for a specific land use type or ecosystem type. And there's all kind of interpolation models in GIS where you can estimate the values of pixels based on values of nearby pixels. And of course, you can have process-based modeling. I show a few examples of these, but again, these are very basic modeling approaches. Here, work from Indonesia, Central Kalimantan, where we basically try to estimate the carbon sequestration in the ecosystem by just kind of finding from the literature what is the typical or the average carbon sequestration rate in one ecosystem type. And then we can look at it. We can have a map here. The value is negative sometimes, by the way, because there's emissions from peatlands that are drained. So that's also in this map. So that's a lookup table approach. It's the most basic mapping approach. With scribing, again, I show the examples of Kalimantan because it was relatively straightforward there, and there was also not a lot of data, so we had to do a lot of modeling to prepare our accounts. We have here timber production, and so we had data for a number of concessions, 38 out of 58 concessions on timber production, and based on if we then correlate and interpolate those data, we were able to also estimate it for the other concessions. Of course, we do consider there the quality of the vegetation and the soils, etc. Now, process-based models, that's a third modeling type. For example, very well known is the revised universal soil loss equation, the Ressler, which you can use to map erosion rates. It's also controversial for many reasons. I don't have the time to go in depth on that. But it is an example of how you can use a basic, simple process model to estimate your ecosystem services flow. This is the pollination model that MAIA and Lof in our group developed. This is just an example of a somewhat more sophisticated model where you link habitat suitability for bees. In this case, solitary bees. We also did that. She also did that for bumblebees. You then can come up with visitation rates so when these pollinators have a certain habitat, how far can they go to pollinate crops? And you see that some areas, those are the most that are orange. Sorry, orange. I'm saying that are pink, and those pink areas they don't have very few, very low concentration of the linear landscape elements. And these are the crops that need pollination. And so this is the detailed data on the crops, and then from there we can calculate then the avoided crop losses because of pollination, and then we have a fairly good physical indicator for the ecosystem service. So that's an example of a slightly more sophisticated model. I'm not sure how am I doing for time actually. I still have a bit of time. So I think actually our life will get a lot easier in the future because now we're all struggling a little bit with preparing the accounts and developing the models. And so one reason it gets easier is that we learn by doing. Of course, for the Netherlands, we put 15 years on developing this first set of accounts, 15 man years or 10, I don't know. Between 10 and 15, and it was a lot of effort and a lot of money, and now we're updating the accounts in a matter of 3 months, but still with different staff. But that means that once we have the models, actually it becomes very easy and straightforward to update these models. If we have updated extent accounts, we update some of the models, then we can have updated models for ecosystem services and valuation also. So the first set of accounts is the hardest. Once the first set of accounts is there, take care, of course, that you properly store your models and you share your models, right? And there's also good meta information on that so that other people are also able to use your model, so you don't have to start from scratch the next time you produce an account. That's very important. And if so, then your life gets a lot easier. Now, the second reason why I think why it will be easier for us to produce accounts is that we can use advanced modeling techniques. So with machine learning, it's not that new anymore now, of course, but still, it's an example from the Philippines where Anana Raja, a PhD student, has tested different machine learning approaches to model, in this case, standing stocks of carbon. And I must say the results are much better. The quality of the map is much better than what we get when we just use our traditional approaches or our lookup table approach. Of course, at some stage we will be able to link also satellite data to specific provisioning services. This is a bit of a mock-up model, I have to say, but this is something that I think we can do also in the future. Another thing is this, of course, modeling condition, floods, frequency, and fires, for example. That is something that is very easily done with satellite data, but we haven't really established those links between satellite data and these accounts. I think the EO of Observation for Ecosystem Accounting initiative is trying to do that. So we're making some progress with that, but there's definitely a lot more that needs to be done. So using satellite data will also make it a lot easier to produce accounts in the future. And that also holds for, I think, ecosystem services accounts, where for some services, especially, of course, crops, we should be able to map that also and model that with satellite data, such as in this case for rice in Vietnam. Yeah, and another one example, of course, is carbon monitoring, where you're able to monitor your carbon stocks with satellite data. Again, that will even be more accurate compared to what I showed before. Now, that was the physical modeling part. I also have a few, 10, 15 slides on the monetary part. Also as a means of introduction, because also for valuation, there is also a specific webinar. But yeah, I hope that you still have the stamina perhaps to stay tuned for the monetary part of this presentation. So of course, in ecosystem accounting, the idea is to value the contribution, right? So not to value the benefits, but to value the contribution of ecosystems to benefits. The focus is also on final ecosystem services, also mentioned by Carl. There's also intermediate ecosystem services, which are basically services from one ecosystem asset to another ecosystem asset and supporting that second ecosystem asset in providing services. What we measure is the actual use of ecosystem services. So the value is based on the actual use of ecosystem services, the actual management of the ecosystem. And that's different, of course, from the optimal or the most profitable or the sustainable use of ecosystems. And we measure we value the actual use of ecosystem services, so the actual flows. And using valuation techniques that are consistent with the principles, the valuation methods of the SMA, the System of National Accounting. And this is very important because it also means that actually ecosystem accounting does not give you the value of nature or the total value or the welfare value or some welfare indicator of ecosystems. No, it does not. Really, ecosystem accounting gives you an indication of, probably an underestimate still, of the monetary value of the contribution of ecosystems to the economy. So not the contribution of ecosystems to welfare, but the contribution of ecosystems to the economy. And it's very, very different. And it is an underestimate in most cases because we still don't measure all ecosystem services. And an example maybe is if we look at water supply, drinking water. So we have a market-conform technique to put a value on the supply of water. But of course, look, without water, we would die basically. So our willingness to pay for that our consumer surplus for that last bit of water would be very high. So the welfare value of water is much higher compared to the market value that we're measuring in accounting. Now, of course, it's logical, right, that ecosystem accounting is not dealing with intrinsic values. That's really about value for people, contribution to the economy. And the focus then is if you consider the total economic value framework with the use value, the non-use values, etc., that we are focusing on direct and indirect use values in the SEEA. Now, let me show a few examples of work done in the Netherlands, again, courtesy of CBS. So, provisioning services, there's several valuation approaches that can be taken that are all consistent with the SNA, but unfortunately they give somewhat different results. So it's good to understand the differences, and it's good to then say, okay, look, based on these or that reasons, we've selected a specific valuation method. Now, for valuation of provisioning services, the first method that we started testing like 7-8 years ago is the resource rent method, which is basically a residual. So you take the value of the benefit, the value of the crop, and you take out the costs of labor and the costs of depreciation of the farmer. In other words, the return on produced capital and return on human capital. And then what is left should be the return on your natural capital, the value of your ecosystem service, the value of the contribution of your ecosystem. So, okay, that is one method. Another method to apply for provisioning services in some cases is to look at rent prices. Rent prices is for example what the farmer pays to use the land to the landowner if he's not the landowner himself to farm a specific area. So the lease price, the rent price. Now, and the third method is user cost of land, which is it's a standard Dutch approach to value land, agricultural land, but it's I think more a national approach, so maybe less relevant here. So then, if we compare, the problem is that the resource rent approach, as you see in this graph, is giving us a negative return in some years, 2011 and 2012, which means that those years, apparently many farmers made a loss in their farming business. And also you see a lot of variation between years. So in other words, that resource rent approach, it's informative, but it has the disadvantage that sometimes you get a negative resource rent, or sometimes it's very low, and also it varies a lot between years. So that's not great for accounting, because obviously the value of agricultural land in the Netherlands with this highly productive agricultural sector cannot be negative. So that's why we decided to take the rental prices as the indicator for the contribution of the ecosystem to this specific benefit. And so the value of crop production in the Netherlands, the ecosystem's contribution is valued in our accounts with the rent prices. Now, for water filtration, what we did is to look at a replacement cost method. So the SEEA framework specifies and the guidelines specify that there's a number of methodologies applicable for regulating services that are consistent with the SNA. And those are, for example, avoided damage cost, replacement cost, and hedonic pricing methods. And so they are coming up with value methods that are consistent with the SNA. And so therefore they're not consistent with the welfare-based accounting, welfare-based economic analysis methodology. So how does it work? So it's very simple. For drinking water, we say, okay, drinking water in the Netherlands is produced by either taking water from the river or water from the ground. Groundwater has a much higher quality than the river water, and the cost for cleaning up the groundwater to the level that it's suitable as drinking water is much lower compared to the cost of purifying the water from the rivers. So the price differential, that's the value that we put on the groundwater that is used to produce drinking water. So it's a replacement cost methodology, and you can use that because it is, first of all, obvious that you can actually that the service will be replaced if there would be no groundwater. For sure, the drinking water companies would be using more drinking water, and it's also the least cost alternative. So that's how we valued the drinking water supply as an example of a regulating service. Now, for valuing tourism and recreation, we had long discussions. I must say, it's so a resource rent approach is one option, but in the end, for the last set of accounts in the Netherlands, we used so we use consumer expenditure for the tourism and recreation service. So basically, we said, okay, the money that people spend on tourism and recreation is an indicator of the value of that service. It's expressing the willingness to pay for the service, and it's total expenditure that we take as an indicator for the service. And the issue is that the consumer expenditure leads to much higher value estimates compared to a resource rent approach. My computer wants to restart now and reformat, which I don't want. So, okay. Okay, so what then do we end up with? Then we still said, okay, there's even when we go for a consumer expenditure approach to value recreation and tourism, we still have a number of options. We can have a limited scope where we say, okay, we only include travel costs to nature areas and admission fees. We can have a middle scope, a medium scope, where we say travel costs, admission fees, but also accommodation costs. And we have a broad scope where we say we also add food and drink and other expenditures to that value of the recreation and tourism sector. And you see that there's quite a big difference in the total value of that service. I think I'll skip this and I'll go here. So this is what it ends up then, the value of the ecosystem services for 2015. So these 10 ecosystem services contribute between 6 and 12 billion euro per year to the Dutch economy. And the difference is because that difference between 6 and 12 is a function of mainly what valuation approach you take for tourism and recreation. Let's first have a look on the right-hand side. You see that half of the value of ecosystem services in the Netherlands is related to tourism and recreation. And that is frighteningly much. And the only consolidation that we have is that in the UK, it is more or less the same proportion. So also in the UK, about 50% of the value of ecosystem services is from nature, recreation, and tourism. And then the question, of course, is why? Why is that so high? And why, for example, is the value of agriculture relatively low? And considering that the Netherlands is I think, still the second largest agricultural exporter in the world based on value terms. That's crazy. Why is the value for agriculture so low? And then, well, you start thinking is to look at your data, and then you learn a few things that are at least new for me. Probably it's related to, first of all, farmers being price takers. So you can only become a farmer in the Netherlands, at least, if you can inherit a farm from your parents, because otherwise it is just not a valuable business proposition to buy agricultural land and start being a farmer. The land is just too expensive. If second of all, the output of the farming sector is of course a function not only of natural capital but also of the technology used by the farmer, the labor, the produced capital. And it may well be that it's such a high tech business farming these days, at least in the Netherlands, that actually the return on your natural capital is quite low. Your production is really a function of farm inputs and the technology used by the farmer. And third of all, of course, you need to consider that the valuation approach that we're using. And again, we look at the contribution to the economy. If we look at the welfare, if we take a welfare perspective, of course, the value of farm products and food would be higher, right? Because there's a much larger consumer surplus. But based on our valuation approach, we end up with a relatively low value for that agricultural, the contribution of ecosystems to sustain agriculture. Now, another one that's relatively important is the amenity service, which you see is 16% of the value for ecosystems. I think that methodology we're still revising, and we may revise that number upwards when we further improve the methodology. Carbon sequestration is quite small, which is not strange because, we don't have that much forest, and we're a small country. And it's also a climate where the forests don't grow that quickly. So these are the numbers for the Netherlands. And in the map, you can see what it means then in terms of how these values are spread out over the country. And this map will be updated by the end of this year. So this is the old map for the year 2015. And you see that the highest value ecosystems, of course, are the systems that support recreation and tourism. So can you see the forest and the dunes, especially coming back with some relatively high per hectare contribution on ecosystems that provide water, drinking water. So those are the values of the Dutch ecosystem services. Let me continue. So for the last core account, of course, is your asset account. And the SEEA framework says that it's in principle it's recommended to use a net present value approach to estimate the value of your asset. And so you look at the expected flow of ecosystem services. and now and in the future, you discount the value of your future services, you add that up, and then you come up with your net present value estimate. And you do that for all the individual services that an ecosystem asset is providing, and you can add those net present values for these individual services, and then you find the total net present value for your ecosystem asset. Now, then you've got two questions immediately. Well, over what time period should you analyze your ecosystem services? And of course, because you discount the ones that are further in the future, count for much less than the present and the nearby future ecosystem services, but still, it does matter a little bit. So we took 100 years, and we try to be consistent with the UK there. Then which discounted rate did we use there? We used the government recommendations, and we took 3% for 3% for the provisioning services, and for regulating services we took a 2% discount. And then we can of course come up with an asset value map and graph, and of course it's not too different from the services map in terms of the proportions, but there's still a bit of difference because different discount rates were used for different service types. And you see that even with the relatively limited set of ecosystem services that we take, that value of the natural capital on a per hectare basis is significant, because you end up with the blue areas with some 250,000 euro per hectare as an asset value. Now, Steve, what do you think? Shall I continue? I think so. Then I have maybe 15 more minutes, and then it's too early for a break. I hope everybody's still fresh. It's hard to see. That's another disadvantage of being online, because if I'm in a classroom or if there's a meeting with people, you kind of see when people are falling asleep. Now I have no idea. So I hope you're still following me.
Yeah, I think carry on with the thematic accounts maybe for another 5 minutes, and then we'll do the questions. How does that sound?
Yeah, 5 minutes. I'll try. Yeah, I'll do my best. I can't promise 5 minutes, Steve, but thanks for at least for being awake and listening. So, okay, biodiversity accounts. So again, try to map and put in tables trends and spatial patterns in biodiversity. Very difficult, because your spatial pattern really depends upon the indicators that you take. It differs per species group. You get different maps, different trends, even if you look at birds or butterflies or plants, etc. You also get different spatial patterns if you look at richness indicators or abundance indicators. Again, you get different patterns. Steve, this will be for you to clarify when you give as you kindly agree to do the webinar on biodiversity accounting. You can show trends, right? So if these are the butterflies in the Netherlands, trends, the average in 1990, 2003 compared to 2004, 2017. So again, it's quite important to have that in-depth data, because actually what you see is that some areas there's a positive trend, some areas there's a negative trend. I must say that most of the rare species are in the red zone, the sandy soils. So but if you aggregate in a too simple way, then you miss that difference between species occurring on sandy soils and the species occurring on the more clayey soils in the rest of the country. The carbon account. Now, I would like to spend a few minutes on the carbon account, because it's the one that has been the most policy relevant in the Netherlands, and that was one of the main concerns that we were discussing as well. So, first of all, the carbon account, of course, it shows the emissions and sequestration, and then we found that there's a total amount of only 3 million tons of CO2 per year in the forest and the estuaries of the Netherlands. So it's quite low, the amount of carbon that's sequestered in our ecosystems. Also on a per hectare basis, also on a national basis. If we look at emissions, it's a lot higher. It's about 7 million ton. Those are emissions from drained peatlands. And there is the interesting link to policy making. So let me dig a little deeper there. So you see the colors are the peatlands, and zooming in, you see an estimate, I should say, an indication of emissions of CO2 in peatlands and marshy soils that are drained for agriculture, for every individual parcel. And you see that some areas, they emit some between 10 and 12 tons of carbon per hectare per year. So that would be up to 45 tons CO2 per hectare per year. Now that's interesting, because first of all, with the accounts, you can relate that to other sources of CO2 emission. And then it appears that 1 hectare of farmland that's drained to that level is emitting the same amount of CO2 as 7 households. So that's quite a number that resonates a little bit more than just the 10-ton carbon or the 40-ton CO2. It is quite remarkable that 1 hectare of a farmer's field emits the same amount of CO2 as 7 households. So either on an annual, of course, or on a daily basis. Now, what can the accounts then do to inform policy making in this area? Well, first of all, of course, with the accounts, we understand exactly what these peatlands are used for. Now, we knew that already, but now we've got it quantified. So much of by far the majority of the peatlands are used for grassland for dairy production. So especially cheese. So the Dutch cheese, unfortunately, is not a very sustainable product. Then what we find is that your condition account is informing us on soil subsidence. It's not yet in the condition account, I have to say, but that is what we will do in the future, I think. But there is information on soil subsidence. So what happens is that these peatlands are subsiding with 1 centimeter a year because of the drainage. So you got compaction, you got emissions of your organic matter. So your soil is subsiding by up to 1 centimeter a year. And of course, if you combine that with sea level rise and being a very low-lying country with 40% of the land already under sea level, of course, that is something which is very worrying. Now, with the accounts, we can move on because we can also say, okay, then what are the monetary services, monetary terms of services and the cost of all this management that we have. So then, okay, so the accounts provide us information on the profits farmers make and the resource rent they make with their farming practices. So grazing, that turns out to be between 1,000 and 2,000 euros per hectare per year. Of course, there's some ecosystem services in the farmland, but not much because it's an intensive farming system and even the biodiversity is quite low in these systems. So then we can look at cost and we say, okay, the cost of the CO2 emissions, up to 45 ton CO2 per hectare per year. Depends, of course, on the CO2 price that you put on that. If we follow the government recommended prices, we end up with costs up to 1,000 euro per hectare per year only for CO2 emissions. And for infrastructure, there's a lot of money required to pump out the water, to maintain infrastructure, to maintain roads, to the piping systems, etc. Between 500 and 1,500 euro per hectare per year. And that means basically that it's quite clear that actually what the Dutch people are doing is to subsidize the farms because the costs for society are larger than the profits the farmers are making. So we're subsidizing with taxpayers' money cheese production. And the question is if that's a good thing to do. Well, if you consider that in addition we have the peatland subsiding by 1 centimeter per year and up to 1 centimeter per year, and everybody being quite clear, okay, this is not sustainable with sea level rise. That means that there's a very strong rationale for changing this system. And of course you can. Okay, let me then continue. So what? There has been a whole policy debate about 2 years ago on the National Climate Plan that was presented in Madrid by a very proud government, which also included the climate plans for the agricultural sector. And there, actually, I think you can say that the accounts have played a role in influencing policy making by showing these costs and benefits. It was published in the newspaper. I was also myself somewhat involved in the discussions with the government on that climate policies in the agricultural sector. And the reason I was invited was because of the accounts that we produced and the data that we have. So that means that the government set aside 100 million euros to deal with this issue, and that much of that money will be used actually to re-wet these peatlands and to take them out of agricultural production and probably to find other uses, but there's not so many other uses that are possible. So much of that will be for recreation and water storage probably. Okay, then how can the accounts further support policy making? That's the phase that we're in now. So this was between 2 and 1 year ago. Now that money is available, and now the provinces and the national government, they are thinking, how are we going to spend the money? And we had a workshop 2 weeks ago and there we presented the accounts, and people were very interested and said, look, we do need the information in the accounts because we can use that information to actually target the interventions that we want to make. And then it's nice to show that, okay, we have a viewer. This is the area south of Amsterdam. You see on the north side of the map, you see Amsterdam starts. You see Schiphol Airport there in that map. And the purple the pink, I think, is reflecting the CO2 emissions from the peatlands. Now you can zoom in into quite a detailed level and see, okay, this is where areas are that are emitting CO2 or are emitting much CO2. So you can do some analysis, right? You can say, okay, for a specific municipality, what is the emissions of CO2 from peat drainage on that municipal level? How has that changed over time? So these are the things that we already can offer. We can also say, look, this is not in the accounts, right? Because the accounts, they tell you what is happening to the environment, not what will happen in the future. But it is possible to link the accounts to basic scenarios and say, look, if you would increase your water level by 10 centimeters, which is not that much actually for the farmers, then you already have quite significant benefits for your CO2 emissions. So this is the current CO2 emissions of the current water level. And if you just increase the water level of 10 centimeters, this is what happens. So those are the things that help, setting in motion local policies to support the transition of these peatlands from intensive farmland to more farming with nature, with lower CO2 emissions, lower soil subsidence. So now I'm finally getting to the end of my presentation. I hope it was not too long, but so what are the policy applications of ecosystem accounting? Well, monitoring the status of natural capital, of course. Is our use of natural capital, is it sustainable? How are we doing? We have all kind of policy aims to be sustainable, right? But are we actually doing that? Well, we can measure that now finally with the accounts. If it's not sustainable, okay, what are the key challenges then? Is a specific area, specific types of ecosystems that need further policy or attention? We understand the dependency of the economy and ecosystems by sectors, how many jobs depend upon natural capital, value. Maybe we see possibilities to increase the use of natural capital. And as I explained in my previous slide, as a base for policy scenario analysis, now we can find, okay, which are the areas in space where you could set priorities, which would be a priority for new policies, for example, for rewetting peatlands. And we could also calculate the benefit and the costs of these new policies. And then my last slide. So, of course, Carl also mentioned what is increasingly being forged is links between SEEA and the business community. And MAIA has a sister project that's called We Value Nature. And they are reaching out to the business community to support them with natural capital accounting. And the intention, I think, is to really connect SEEA system to also the natural capital accounting in businesses. So that was my presentation, and I'm sorry that it took a bit more time maybe than planned. So much to say on this ecosystem accounting. Steve, it's over to you.
Thank you very much, Lars. Covered a lot of ground there, and I think really appreciated those examples that for Indonesia and the Netherlands that I think really bring to life the role of the SEEA in creating this integrated picture and moving beyond these sort of ad hoc sector-specific studies to really help identify what the trade-offs and synergies are in different land uses and different economic ways and activities in which we use the environment. So yeah, that was really nice to see that context. Captured some questions in the chat. We've gone along. Kia has a question from the last session, and then Catherine, Cremina, and Garcelia. So Kia, do you want to pose your question to Lars, or from the end of the last session, or I can repeat it?
You can repeat it, but as you wish. I don't have it as I'm reading another ones. I don't actually at the moment see it, but
no problem. So
I can, you can start and listen to the answer, and when I could, if I could come back later on, that could be good. Yeah.
Okay, so Are there also new developments in the counting of ecosystem contribution in addition to the residual value concept? For example, could the stated preference methods be used in valuation as well? And could the service values be added up to per certain hectare of ecosystem type? Was the question, Lars.
Thank you, Steve, and thank you for the question also. So first, the stated preference methods, of course, they reveal a willingness to pay, which would include your consumer surplus. So in principle, stated preference methods are not applicable for accounting. What is the best alternative then is to link your stated preference methods, with which you can reveal a demand curve, right, for your ecosystem service, with a simulated exchange value approach, as was piloted and by Alejandro Caparros. I'm not sure if he's in the call now, but I personally think that is a very nice method, because and basically how it works is that you kind of assume that your ecosystem is a profit maximizing entity. How strange that sounds, but if you make that interesting assumption, then you can base your demand curve, which you could base on a stated preference survey, and you could link that demand curve to a value that you could use in ecosystem accounting, and that would be consistent with the SMA. So the answer is yes, you can use stated preference method, but you have to go a little bit beyond that to come up with a value method that is compatible with accounting. And the best thing is to, if you're interested in the topic, to either contact Alejandro, if I may suggest that, or at least you read his work and read the work on the simulated exchange value method. The second question, if I got it correctly, is that if you can add the value of services, and then the answer is yes. So an ecosystem asset will usually provide more services, right? Maybe 5 or 10 services. Each of these services has a certain flow, and you can put a monetary value on that flow of the service, both an asset value or a flow of the service, and you can aggregate those, so to get a total value of the flow of the services provided by your ecosystem asset. So yes, you can aggregate.
Okay, and there was a first question regarding the residual value concept.
And what was the question on the residual value concept?
It was whether you have, if you apply the residual value concept for the, for example, for the provisioning services. The ecosystem contribution, it would be quite low, and where it's a question whether this, if you derive the residual value, you have a resource, with a resource approach, and then you deduct all the costs related to the economic capital, and then what's left, it's profit, or what is taken as a residual, it's quite low, and we could question whether this profit is not also a man-made capital, as we work for why to consider this as a ecosystem contribution. So, and we could think whether the ecosystem contribution is something which needs alternative ways of taking it into account. And as I've seen, the last London group also discussed this as, for example, for the ecosystem contribution of agricultural production, alternative approaches as MAIA approach was discussed, which of course there is a question how to monetize this part, but in order to capture the contribution of ecosystem also kind of sufficiently, more adequately also to capture this part. So, so this is the question whether you have considered, in addition to the residual value, also to look at the other ways of taking ecosystem contribution into account. I'm sorry, I noticed that during your presentation you also touched upon some of these issues, but I had another call I had to answer. But at that time I saw
okay.
So, but thank you. Anyway,
but Kaia, that's fine, Kaia. I understand your question. Yeah, sure, thanks. And you're right, I did cover that in the presentation. So the short answer is then is that the There are issues with the resource rent, including the reward for entrepreneurism, for example, as you rightly say, and also the variation in the strong variability over time. So we did where we can, we try to avoid resource rent actually. And in the case of provisioning service, as much as possible, we use the resource rent, sorry, what I'm saying, we use the land rent as the indicator for agriculture. And then we use stumpage value, for example, for as traded in the market as an indicator for the value of timber production. So we try to find alternatives wherever we can, Kaya, for the resource rent approach. Steve, what would be my next question?
Okay, so there was a question, well, a couple of questions from Catherine Farrell on using the WFD data and also linking to policy applications. Catherine, do you want to
yeah,
pose your question?
I will, and I suppose just to say I'm an ecologist myself, so when I am speaking, I'm usually sort of linking it more to the ecology side than to the valuation. In our project, where we're at, we're just developing the process steps, so some of the questions are very specific, and I don't mind if you want to send on answers again, but one of the things that has stood out for me when I've been reading the revision chapters, when getting into the nitty-gritty of the condition accounting and the condition accounts is, and this probably more relevant in this discussion with our European partners, is are people finding that they should disaggregate the Water Framework Directive and the Habitats Directive condition status or ecological status of water and conservation status, or are they quite happy to just keep them in that sort of aggregated level? So that's the very specific question. And on the other aspects, I thought your presentation was just really useful, Lars, in terms of, so while we're focusing on, the nuances of the accounting and trying to become expert in the process steps, we're very much trying to keep it relevant and policy relevant. And that particular example around peat, because you can barely turn around, but you step on a bog in Ireland, and there's so many policy issues in relation to farming. And for the first time in the last couple of years, headlines in the farmers' journals have been rewetting of peat, and so that issue is starting to come into play. So I think that cross-cutting issues, right across the board, I think that's the real relevance of the SEEA accounting at this time, for those immediate questions. So that's just a comment and a specific question.
Yeah, thanks, Catherine. That's very helpful. And your question is very interesting, of course, because in a way, the SEEA is serving two masters, if you want, right? Because on one hand, you're informing policymakers of general trends in what's happening with your natural capital, with your ecosystems, and then maybe that indicator of good, bad water quality from the Water Framework Directive is good enough. But if you want to support actually the formulation of policies or the implementation even of policies, then you need to go much beyond that in terms of your water quality indicators. So, and I think, to be honest, we're not at the point that we can say, look, at a global level, it should be standardized like this or like that. I think every country should really have the freedom and take the freedom there is. And that SEEA framework is a framework, right? And even when it's a standard, I think there will be many options to choose from for countries themselves. The SEEA gives you a set of definitions and a set of concepts and a set of linkages and accounts, and then the type of indicators that you include and the level of detail that you go, both the spatial resolution or the temporal frequency and the number of maybe individual water quality indicators that you add in an account. I think that should be probably fully up to the countries themselves. So if you say, look, for Ireland, we need to have these indicators to measure water quality in a way, then I think the SEEA says, okay, fine, you do that. So I think that there is not an answer of yes or no, Catherine. It is really a matter of designing the system that it fits well the needs of your country. If that's of any help.
Yeah, well, I think it's very helpful because in the standard and in the guidance notes, it's probably an important aspect, and I'll discuss this with Carol as well, that it's made that, you know what, in the beginning you won't have everything, you'll have something, and it's how you use that that's important, or how you convey the information and identify the gaps. And I suppose with the regulating services, I think modeling is the only way at this time. But as you say, the remote sensing, it's just, you know, progressing, you know, and advancing, and the machine learning, I think that's really going to be the best way to help us in the future, because it'll just make it simpler and quicker, but still you need to verify it on the ground. So, you know, as an ecologist, I see it's really important, but sometimes ecologists, we can get too much into the detail, whereas the policymaker just needs to have it at the surface. You know, it doesn't really need to know whether, you know, how many frogs are in that wetland. But, you know, at the same time, it's important to have the two approaches, you know, that you have that, you know, granularity, and also you can step back and make a value judgment.
Yeah, thanks. Yeah, that's exactly what I try to say as well, Catherine. Yeah.
Okay, good. I'm conscious that we've hit a quarter past, but want to still field the questions for Graciela and Cremina at least, but understand if people have to shoot off. So thank you very much for joining us today. Graciela, Rooch, hopefully got your name correct there. You had a question on the alignment with the carbon accounts and national report.
Yeah, thank you very much. I'll try to be brief. Thank you, Lars, for your presentation. I just wonder, do you have any comment about how these carbon accounts map into the current schemes used for reporting of to the Kyoto Protocol, for instance? So if you have any, if they don't map too well to each other, if you have any comment on what the consequences of this?
Yeah, Graciela, thanks. Yes, I do. So they're not the same, and the kind of the underlying reason for that is that in the accounts, the way we set it up, or it was set up in the beginning, is that it seemed a good idea to go for high spatial resolution. But of course, there's a bit of a trade-off here, and that means that the temporal resolution of the accounts is slightly coarser. So and accounts, again, you want to be consistent with the SNA. So the SNA is reporting on an annual basis, and it works especially true in the carbon accounts. And the concrete difference is that with the UNFCCC reporting, what you do report is you emit your. There's two differences actually. The first one is you report your emissions due to land use change in a given year. And so you look at the period 1st of January to 31st December, and you say, okay, so much forest has been converted to agricultural land, and that means that led to the loss of so many tons of carbon. And that's what you report to UNFCCC, and that's of course, logical and fine. But in the accounts, in principle, it is possible to say, look, I've got an opening stock of my land use on the 1st of January and a closing stock on the 31st of December. And then I look at what forests, how much hectares of forest have been converted to land use, in principle, and then it would be consistent. But in principle, but in practice, what you see is that countries kind of, and also UK, we said, okay, we have like an average land use for 2018. So we have one map for 2013, one map for 2015, one map for 2018. And basically, we're unable to understand how our ecosystem types change between these 3 years. But we don't understand how within the year 2018, the ecosystem extent changed. So that means we were not able to And it could be done in principle. It wouldn't be against the SEEA standard to do it that way. But it's not being done at the moment in any account, as far as I know. So that's the first difference. And the second difference is that UNFCCC has made some policy choices, I think, policy motivated choices on what to include, what not to include. And one very big factor here is that in UNFCCC, you don't have to report your emissions from the drainage of peatlands. So that 7 million tons of CO2, in the Netherlands is not showing up in our Dutch report to UNFCCC. So and you could say 7 million tons, it doesn't matter much. But in Indonesia, it's 700 million tons of CO2 per year, and it's not showing up. So that's weird. It's really weird. And the idea, of course, of UNFCCC, and the motivation of UNFCCC, as you can say, of course, is that the drained peatlands are a natural emission. It's not anthropogenic. It is a natural part of that ecosystem. Fire in peatlands, you have to report to UNFCCC, not drainage. But of course, it's not natural because the peatlands in a natural state are not drained. So it's weird. So that's another difference. And in the carbon accounts, the way we set up and implemented, at least in the Netherlands, the carbon accounts is that you include all emissions, or at least, well, I'm not sure actually if it's strongly defined if you include all emissions or only anthropogenic emissions. But at least in the Netherlands, we did include those drained, the emissions of drained peatlands. So, okay, that's the answer to your question, Graciela. They're not 100% compatible, and it's an issue, of course. And that is one of the big issues we had when we published our first set of accounts, because there's researchers in the environmental field that said, but your estimates of CO2 emissions are different from ours. And the ministry was also not happy with that, because they said, look, we have an obligation to report to the UNFCCC, and now you come up with different numbers. So we did write a specific note to explain why the numbers were different and how they were different. And I do think that in the future, we do need to be even a bit more consistent and aligned in those reporting. But I think that is more a discussion to be held not by some university guy like myself, but between UNSD and the UNFCCC.
Thank you very much.
Okay. Thank you. So Cremina had a couple of questions, I think, in the chat. The first one being the sort of disaggregating non-ecosystem inputs versus others. Cremina, would you like to perhaps pose your question? I'm not sure which one you'd like to prioritize.
Yes, thanks. Okay, I'll be shorter in speaking because time is really racing. Basically, my concern is that everything outside the current production boundary has a downward valuation pressure, and this also concerns the avoiding of double counting. For example, for recreation, in the books, basically what we'll show is the production costs for the recreation service, but not the enjoyment from nature itself. And in disambiguating from this, the tourist industry is now under pressure. Nobody would want to actually raise the valuation of their own service, albeit they are under pressure to raise the prices as well. And in the absence of markets in most commodities, we can't realistically expect that there will be things like carbon markets for each and every service. Actually, we run the very strong risk to have a wrong message to the policymakers because of this downward pressure and bias towards diminishing the nature's contribution. So how to cope with this? I would really look into sort of exchange rate between what we get and what we do, but it's an extremely complicated issue to disambiguate between human inputs, especially from this sort of intangible services, and really put the right value to the natural inputs.
Yeah, Carmen, if I understand your question correctly, it is about maybe underestimating the value of nature in the values that we produce with the SEEA.
Yes.
And then I totally share your concern, I must say, because it is the big problem arises, of course, if people that are using the account, if they believe erroneously that the values in the account, the monetary values, are representing the value of nature, which they're not. So all the time, as people that are constructing, compiling the accounts, we have to do a big effort to make very clear that, okay, there's monetary values in the accounts, but they're not the value of nature. They're the value of the contribution of accounts to the economy, as a contribution of nature or ecosystem to the economy. So it's not the value of nature. And the value of nature, I would probably put at infinite, because if there would be no fresh water and if there would be no oxygen, then we wouldn't live very long. So that's an issue. I agree with you, and we have to be very clearly when we communicate, and we also should avoid, for example, that we say, look, the value of recreation is quite high. Again, the Netherlands, for example. So why not, if we want to earn more money, why not convert all our national parks to holiday bungalow parks? That would be a good way of making money. Of course, the account would then show, okay, we lose our biodiversity, we lose all kind of other ecosystem services, but maybe from an economic perspective, that would be good. So in other words, these values that are not in the account, the intrinsic values and bequest values and they're also very important, right? And they should not be forgotten. And I agree with you, when we have a set of monetary values on the table, but there is no information on the other values. So I share that risk. I still think it's very good to do the accounting, because at least we have some information on the value of regulating services, which otherwise would be completely forgotten. And we also have a lot of biophysical indicators, right? So the value of the account is not only in the monetary values, it's also in having a set of biophysical indicators, including indicators on biodiversity.
It's better than nothing, agreed. But the thing is actually that once we start cherry picking, people tend to simplify, especially in policy making context. Like you mentioned that there is no obligation to report some types of carbon emissions. This is one example. Once people start thinking carbon, and they tend to emit other processes, like even other greenhouse gases. And I'm afraid same thing could happen in losing this distinguishing between human inputs value, nature inputs value and nature's value.
Yeah, good point, Romena. Thanks for bringing that up. Very good point.
Yeah. Thank you. And I'm conscious we're getting to past the hour, so maybe a good time to draw things to a close. But I think that discussion really does highlight the need to make sure that we have the right indicators in the accounts for all the things in nature that we value, so that we can articulate what's happening to those and various different economic activities in states. So thank you all very much for joining today. I'll pass over to Lars to wrap up now, and perhaps just give a quick summary on the upcoming webinars before closing. Thank you.
Well, first of all, thanks a lot, Steve, for moderating. Right, you've done a great job in synthesizing the questions and leading that all in a nice way. Thanks a lot, and everybody, thanks for joining. Of course, I'm happy there's still 52 people. I hope most of these are not people that went out for lunch already half an hour ago. Let's see. But it's nice. There's some good questions. Thanks for tuning in. For the coming webinars, we will be posting them on the MAIA website. We don't have the exact dates yet. I showed the topics already, but we'll be coming back on that very quickly, hopefully next week or the week after at the latest. So thanks, and everybody enjoy your lunch and have a good continuation of the day.